Sierra Club Foundation dumps BlackRock after failed climate stewardship. In a move that could signal a growing shift in institutional investment strategy, the Sierra Club Foundation has divested from BlackRock, Aperio, and redirected its assets to Nia Impact Capital and Exponents, citing BlackRock's failure to act on climate-related financial risk. The foundation manages approximately $200 million in assets and distributes between $80 million and $100 million annually to advance environmental and social causes. Its investment decisions carry weight not only because of their financial scale, but because they reflect the fiduciary expectations of mission-driven capital in an era of escalating climate threats. A fiduciary reckoning in climate finance. Institutional investors are under increasing pressure to account for the systemic financial risks posed by climate change, with global damages projected to exceed $38 trillion annually by 2049, and climate-related losses already costing the world $16 million every hour. The urgency to align capital with decarbonization is mounting. The Sierra Club Foundation's action reflects a growing consensus. Reducing exposure to climate risk requires more than ESG labels. It demands measurable progress on real-world emissions. Remarks from Paul Rissman, Emeritus Board Member of the Foundation. Climate risk is financial risk. BlackRock has refused to fulfill its fiduciary duty to long-term investors and support real-world decarbonization through stronger stewardship practices. Why the Sierra Club Foundation cut ties. The foundation had spent more than 3 years engaging with BlackRock, including a formal warning in May 2022 that placed the firm on watch. Despite this, BlackRock made several controversial decisions that raised red flags. It withdrew from the Net Zero Asset Managers Initiative, NZAMI, in early 2025. Support for shareholder proposals tied to environmental and social issues dropped to just 4.1%. Climate and decarbonization guidelines, developed with stakeholders in 2024, were quietly rolled back. Its value-aligned investing webpage now leads to a broken link, further eroding confidence. This pattern signaled, in the Foundation's view, a retreat from climate responsibility at a time when stronger stewardship is needed. A strategic reallocation to mission-aligned firms. In response, the Foundation moved its assets to 2 firms with strong climate credentials. Nia Impact Capital, a women-led asset manager with fossil fuel-free portfolios, customized proxy voting, and a history of pushing public companies toward climate solutions. Exponents, a Black-founded and Black-majority-owned investment firm with a multi-strategy approach focused on sustainability, equity, and fiduciary alignment. Both firms reflect a deeper commitment to impact-first investing and systemic climate risk mitigation, goals increasingly demanded by institutional clients. Ben Cushing, director of the Sierra Club's Sustainable Finance Campaign, stated, "By moving funds to more responsible asset managers that are proactively addressing the profound financial risks of the climate crisis, the Sierra Club Foundation is leading by example." Beyond portfolio risk, the need for systemic decarbonization. Crucially, the Foundation's move reinforces a shift in how investors view climate risk. Traditional approaches, such as screening out fossil fuel stocks, are no longer seen as sufficient. With climate risk affecting entire economies and markets, the financial sector must transition from managing exposure to mitigating systemic risk. Research now suggests that global equity values could decline by up to 40% due to unchecked emissions. That kind of risk cannot be diversified away. It must be addressed by reducing emissions economy-wide. BlackRock's role in a shifting landscape. Once hailed for incorporating ESG into its messaging, BlackRock now faces growing scrutiny from both sides of the political aisle. Its recent climate rollbacks follow legal and political backlash in U.S. states like Texas and Florida, prompting speculation that major firms are prioritizing short-term optics over long-term resilience. For many mission-driven investors, that is no longer acceptable. You've been listening to Sustainability Soundbites from E+E Leader. With over 10,000 downloads in the first 6 months, find out how you can expand your brand as a Soundbite sponsor.